Greetings, Jedi traders. David here of Trading Fibs to bring you the state of the indices for the week finishing up November 13th, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market. See what's going through my head or any given week on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Hey guys, wrote this wonderful article back on November 2nd. Are stocks set to reverse course? Watch those open gaps. Yeah, that wasn't my original title. My original title was basically Market Rallies and Open Gaps. And many investors, there it is, my tagline, may not want to hear this, but I think the market will retreat. Why do I say this, and what guarantee? The truth is, I had no idea when it would happen, but the probability of it happening was increasing. And that is what exactly happened this week, as we see starting off with the Russell here, market action. What a day today, as we'll see here on some of the other future indices. But starting out the week, weekly open 1195.8, missing that open gap up there, 1198.8. Closing out 1, 2, 3, 4, 5 daily gaps on the way down. The turquoise lines are daily open gaps from previous sessions. As we move down here, you can see the price action actually leaving some open gaps up above. Here, a nice big open gap that we left here from Wednesday, as the TF migrates and continues downwards. Whether we come down and get these lower numbers, 1113.5, is yet to be seen. We'll see this on the long-term chart as to the probability of that increasing. So TF to the downslide after finding a little bit of chop action at the top here for the majority of the first week of November, and coming downside. We'll take a look at the Fibonacci targets or support lines on that as well. Jumping in the YM, same picture as we started the week, sideways after, that's right, after some market action just chiseling out at the tops here, not being able to push any higher. 17,791 was the weekly opening price, leaving a major hole here on from Wednesday to Thursday, and just continuing that downslide as we continue to close out daily gap after daily gap, as we continue our migration downwards to a low of 15,726. Whether we close out that daily gap today or whether we close that out, that's right, in a year, eventually that daily gap will be closed. Market profile, we can see price action here again, same picture across the board. Downside, leaving no major open gap here. We actually 45.86. We closed out the NQ, the only one that closed out that daily gap from Wednesday to Thursday, and then coming downside and leaving one up here at 45.86.25. The NQ, plenty of room to come downside. 39.97.5 is the last daily open gap on my chart. Here we have the ES rolling across, leaving that open gap from Wednesday to Thursday, leaving an open gap here at 47.5, and market action coming all the way down. That's right, ES all the way down to 1874.75, final open daily gap as we continue to migrate downwards. Whether or not and if it happens now, that's continued to be seen. All right, so what is the, let's actually finish up with the crude here for a second, as we see crude migrating across downward in this continued trend that the crude has been in for a while now. For most of November, as crude continues to just take out one daily gap out after another, and the crude leaving an open gap up here, 43.07, from that Wednesday to Thursday. So what is the significance of open daily gaps, and when do they get closed? Well, as written in the article, and here as we see posted, this here being the YM chart. Here we see an open gap that was posted last October here on the YM, and the question is when do these open gaps and get filled? Well, we never know when they get filled. You know, we had hoped perhaps maybe a couple weeks later, as we see continued price action rise upside. It only took almost a year, most likely 10 months, for eventually price action coming all the way downside that we saw here in the August, as we saw that late drop, and then this push back upwards as we've seen in the last month of October here. So again, the significance of daily gaps is nothing more than a point of interest on a chart. It's an area We can call it an area of concern, as trading members in the room might call it, but in the end, open gaps get filled on the major indices, and it's a point of knowing that eventually price action will come back down. And so that open gap back in October was filled back in August. As we see price action continuing upwards here on the YM, we migrate down. Now, whether we close this open gap here in October right now, or we have to wait an entire another 10 months or year, that's to be seen. All right, let's jump into volume profile. Is the volume profile similar picture as we saw on the other major indices? Price action coming downside, especially the volume profile. Of significance is seeing how much price action was traded at a certain price versus how much price action was at a certain given time. As we could see, the 70% range related here to the orange section of each day's profile, and the 600 period. That's right, look at that right today on the Russell coming down to 1144, a significant line. 600-day period, mean open point of control right there, 1144. That's where the TF pretty much settled for today's action. The volume profile here on the YM's got a ways to go to downside 16617, which we just might migrate to. We got open gap down below there and daily open gaps, but big picture 600-day macro POC as we saw volume break downside, close out some previous open points of control from some time back. As we scroll back here to October, closing those out. Market takes care of old business all the time on the indices. Here we have the NQ as we see price action migrating downwards today. Huge day, 4271.25 as we leave open POCs up above, knowing price action eventually will return as we see us closing out some of these points of controls we just saw in the YM from October. Jumping over to the ES, we have the ES price action, 2083.50 as we migrated. We saw this center of not control, but area of a holding pattern here at 2083.50, which was the 600-day period macro point of control as price action, like the other four major indices, migrated away. Yes, we do have downside, just like we have daily gaps downside all the way down to 1874.75 to take care of downside business. And there it is, right down to the, look at that, right down to the T right here, and bounced up back inside into value area. Finishing up on the crude, as we can see price action, 600-day macro POC here at 45.91. We've shifted away from there. As we'll take a look at the long-term charts, we'll see migration still continues downwards, closing out former points of control. It's all about the business. That's right to the upside at some point as we continue to drive down into the crude lows. Let's jump into the long-term picture as we see our weekly action coming down. Is it to say that the market action might turn back upside? Who's to know? All we can see is that on today's price action, very much a down day as price action sold off on the swing picture. Here we have the Russell down here on a 50-tick range chart, 4-hour range chart, downside on the T3 moving average crossover. 4-hour chart is now below the 50 and the 144, so increasing the odds to the downside with lots of good volume today. Here we have the TF daily breaking downside of the 144 and the 50 as we saw some resistance over the first weeks of November. Here we have some of our new charts that we've been posting lately with the Kiwi trailing stop and a 5 SMA price action now holding downside below the 5 SMA, and the bigger picture on the weekly coming downside to the 5. So as we see the Kiwi start to form a trail here, the picture starts to look like we might be just heading downwards, increasing the probability as we see the weekly here has been in a downslide, holding up at the Fibonacci level. The big picture all around, when you have red under the 144, monthly under on a crossover downside in the red, and you have a daily still in the red, the 50 below the 144 in the reject, the bias is continuing to build up as we see open daily gap. We just left one upside. Eventually we'll return to take care of business upside, but here's that open daily gap downside we've been talking about. You just have to go over to the market profile, go over your TF chart as we migrate downwards, 1128.5, 1122.1, and so who knows, eventually we might come out and take care of that open gap Maybe now, maybe next year, it doesn't matter, but the continued probability is increasing as we move downwards. Let's jump into the YM. Downside, downside, break, price action on the outlook here as we continue downside under the 144. A 4-hour chart where the 50 will cross the 144 will increase that probability that will come down here and capture some of those open gaps down below. Fibonacci retracements might hold the line. We're below the 200 period moving average. Watch the YM here as we see support here at the 51.44. If price action breaks down here as we see on the Kiwi, we've already got a trail downside on the daily, the weekly breaking under the 5 SMA. Though we have a little bit of ways to go here on the T3 moving average, weekly upside, monthly still downside, so 50-50 chance, but here we go as probability increases. Another couple days of downside movement will lead this YM downside to close out this daily gap all the way down here around 16,404. Note that the YM taking care of that open gap from end of October. Market takes care of old business, but we just left ourselves another open gap up above. NQ downside. What a day on the NQs. It rolled down on a 75 tick chart. 4-hour chart, T3 moving average downside. 50 price action under the 51.44 as the weekly is upside. Slightly coming down here on the Kiwi trailing stop 5 SMA. Price action holding down now on a daily as we see price action coming right down to the 50 period moving average. NQ, wonderful sell-off. Probability that we continue downside will be on extreme volume as we saw volume meeting the 60-day average, closing out that daily gap here today. What a move as we migrate to the lows. Who knows? Markets never take a direct route. They may chop their way down as we have approximately 1 month left in this contract. We're approaching that 200 period moving day average. Here we have the long-term ES outlook as price action ripped to the downside. Today, price action holding underneath now the 51.44, continuing the trend on the downtrend with the monthly, weekly coming under the 51.44. Weekly still holding up to the edge to the upside. So if this is nothing more than a price retracement, that weekly will still be in play to the upside. And as we see here, ES took care of its daily open gap here, but it once again we left one to the upside. Price will eventually retrace back up here. Watching our Fibonacci line, seeing if all we're going to do is come down to maybe a 50% retracement, or do we come down and close out this daily gap from the beginning of October is yet to be seen. And finally, on our crude charts, we know the picture of crude to be following downside. Price action 51.44 has been downside. Price action all this month and pretty much November has been downside. Monthly is downside. Weekly turning back to the downside, breaking underneath the 5 SMA. Kiwi trailing stop now in the downtrend as price action now underneath the 5 SMA. The picture on crude right now as we see the Fibonacci, where did we go? We went right to, that's right, look at that, right to the 50, 61.8. Maybe a slight edge close above it, but turn around and right back downside, leaving some open gaps as well. So, market outlook for next week as we head in, knowing that price action for the most part had a couple days sell-off. Could be nothing more than a fib retrace, or do we continue in the downtrend as we saw here in the swing positions to the downside? We would need the 51.44 on the 4-hour charts to pull downwards to continue this drive down, perhaps to a former Fibonacci level, to a Fibonacci retracement, or to perhaps those open gaps and close them out. Let's take a look at what's set for this week on economic data as price. Let's go. We had that up right here. There you go. For November, we start out the week lightly on Empire State Manufacturing as we lead into the week. Industrial production, Red Star event, Fed speakers during the week. Thursday, heavy with the jobless claims and Philly Fed as we wrap up the week on November 20th and head into the holiday season. As we move into next week, it's always important to go over your charts during the weekend. I like to always visit some of my favorite charts from articles at CM Market, Investors Business Daily TV. Always love reading about Heiken Ashi bars, ICE Exchange with their analysis for the week, Jason Kelly at the 3% signals, and of course the Shadow Trader outlook. And that, my friends and Jedi traders, wraps up this week's Insight and State of the Indices. Feel free to stop by Trading Fibs, any of my social media outlets, to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs. I run a live trading room where we practice this stuff every day, live in the trading room, and call out the trades as they happen, giving us the increased probability of either direction. I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Everybody have yourself a Blue Zone day, a Blue Zone weekend. Good day, good night, and good trading.